Friends, very good evening to all of you. I welcome you all to the series of meetings we have arranged post our 52nd regional conference, and it is all on the important topics. Today we have a very eminent speaker, CAB Shekila, who is also our past treasurer of SARC of ICA, who is going to address us on compliance with auditing standards. I keep telling that the auditing standards are the Bible, Quran, or Bhagavad Gita. Probably that will kind of help and come and aid to you whenever you find yourself in trouble. So kindly take that seriously. The auditing standards are no longer just a syllabus for final where you learn and then forget actually. So you have to take care of it properly so that tomorrow you don't end up in courts taking a oath on Bhagavad Gita, Quran, or Bible, telling that I take it and whatever I say is. So we have with us CA Shekila, who is kind of an authority on this subject when it comes to auditing standards and accounting standards. So we are thankful that he has agreed to share his thoughts on the ones which are applicable or which our members kind of will need an update on. So before I request the speaker speak, I request C. Abhishek Murli to introduce, and then we'll request Revati ma'am to give a special address, and then we take things forward. Abhishek, over to you.
Very warm good afternoon to all the participants who have joined in today. Dynamic Chairman, CA Dungarchan Jain, fellow council colleague, CA Revati, and of course the star speaker for the day, CA B. Sekirar. It's a pleasure and a privilege for me to have the opportunity to introduce our speaker today on a very, very important topic. And of course, before I do proceed there, even though yesterday we had a session and I acknowledged the contribution and the success of the regional conference, today in the presence of the chairman, I once again want to congratulate him for leading us in a very, very successful first ever virtual regional conference. We had more than 3,400 delegates, and I must say it was a grand success. So I congratulate the chairman for leading us very successfully through this regional conference. And of course, as chairman very, very rightly put it, auditing standards today has become a necessity. It was just a syllabus in our exams, and even in a jocular sense, it is a syllabus in our CPE also now, because there's a mandatory 2-hour requirement that you have to complete it. So that syllabus is not going to leave you, it is still chasing you. And we are trying to put the best sessions, the most practical session with the best speakers. And today's session will be covering a lot of practical aspects that you will have doubts about. And the timing is very important because I am sure you're all busy with your 31st December. So you'll be coming to the final touch-up stages of all your audits. So I'm sure the inputs of Sekirar sir will be very, very useful today. So now I have the privilege of introducing formally the eminent speaker for the day, CAB Sekirar. He is a BCom graduate from Vivekananda College in Chennai and is a fellow member of the Institute of Chartered Accountants of India. He has over 2 decades experience in audit, tax, financial advisory, and consulting practices. In fact, he is currently a director in the Mumbai office of a very, very huge multinational. And from 2010, he has been serving for clients in the venture capital, PE funds, sovereign fund industry. And in fact, he even served as a CFO for a few companies. He is a regular visiting faculty of various management institutes across the country and is a very well sought after director trainer for directors across the country as well. He's a regular resource person even at our ICAI, and he served as a co-opted member of the Accounting Standards Board when Ind AS was drafted and released. He has also been a trainer for the Peer Review Board for more than 15 years. And as the chairman rightly said, he was an elected member and he served the institute for a very, very valuable term. And his contributions as treasurer and SICASA chairman were always very, very well appreciated by our council colleagues and various people in our profession. And despite his very hectic schedule, he did this. And despite his very hectic schedule and a very cold weather, he has joined us today to share his knowledge and presentation with us. I welcome you, CAB Sekirar sir, for joining us today. We're looking forward to your presentation.
Thank you, Abhishek. Thank you. May I now request CA Revati Raghunathan to share her thoughts, and then we request the speaker to address.
Good evening, everyone. Good evening to the chairman, as he's called the dynamic chairman Dungarchand, Jain secretary Abhishek Murli, and my own guru on accounting standards when I took up the peer review certification, the course in the SIRC. Sekaryar sir was the person who was sharing his knowledge and one of the leading trainers there. Today he's going to talk to us about auditing standards. I think that we are all now realizing that auditing standards is one of the pillars on which our profession is standing right now. We generally focus on accounting standards, ethics, and we focus on the disciplinary actions. But auditing standards is something like how the chairman and secretary said, we all used to prepare very well for the exams, and then now we try to pass our profession throughout based on the knowledge which we gained throughout in the exams. But actually, if you see, auditing standards is something based on which our entire profession should be functioning. We think that if we do the income tax and we do our indirect taxation and we do our accounting standards, we can manage to pass muster. But we fail to give the importance that is required for the auditing standards, because ultimately when we are signing the balance sheets, we are trying to say that there is no material misstatement, there is no errors or frauds, and we are doing everything based on the understanding of the entity's internal control. All these things we are assuming we are doing it, but whether we are actually doing it based on the tenets which have been given by the institute, that most of us will I don't think are actually checking it out. Like we have a checklist for accounting standards, we do not have a checklist for auditing standards. We know we have to obtain sufficient appropriate audit evidence. We talk about materiality, but what is appropriate audit evidence? There is a actual definition for what is an appropriate audit evidence in the auditing standards. I'm sure sir is going to talk about that. I'm not going to break the suspense on that. What is the material misstatement which exists? Whether we are designing and implementing the appropriate responses which we need to do for the risks which we are assessing in our clients' entities, and how we are forming an opinion on the financial statements. Because finally, auditing standards is the one on which our audits are based, and the economic decisions of all the stakeholders are formed. And so we have to form the opinion on the financial statements based on the audit evidence whichever we are obtaining, because that is again the backbone on which our entire profession is operating. So I think we have Sekaryar sir, who is going to give us this strong foundation in auditing standards, which is most required for us today in the profession, where we are facing so many spikes and arrows from so many different directions. And I think if we comply with the auditing standards and the pronouncements of the ICAI, we would be able to have a shield to protect us from all those arrows and spikes which are coming in. So thank you very much. Over to the speaker now. Thank you.
Yeah, thank you, Revati ma'am, who herself is an authority on IBC. So she rightly touched upon the importance of standards on auditing. In audits as well as the IBC, it gains more relevance because tomorrow when questions come, you'll have to kind of demonstrate that you had kind of followed things which were required to be done. Shekhar sir, over to you, please.
Thank you, sir. I respected Chairman, Mr. Jain, energetic and young Secretary, Mr. Abhishek, and Madam Revati, and it has been my pleasure to have worked with all of you. Mr. Jain as part of Madurai branch when he was in the leadership role. Abhishek I have seen for many years, and in fact when I was the SICASA chairman, his father, Mr. Murli, had been the Board of Studies secretary. And Revati madam had come for a student seminar in Pondicherry along with us, I remember. And it is my pleasure to be with all of you. And I congratulate the entire regional council for having made the regional conference a grand success. And I would say the feeling and the interaction between the member and the institute has gone up very significantly with the e-platform. and every seminar is very useful for the members. Thank you very much for giving quality program, sir. And we have not felt the absence of this really remote thing, but we find that institute has come to our doorsteps, and it is a great feeling. Thank you very much. And I will do my level best on this auditing standard today. Thank you. I thank the chairman and the secretary, and also the management committee, the SARC of ICA, and also the ICA, all the ICA officials for ensuring that they are coordinating with me on this PPT as well as this testing. And I thank every one of you for giving me opportunity to come and share my time and thoughts with you. I will start the PPT, sir, loading the PPT. So you are able to see this?
Yes, yes, visible, sir.
Slides are changing, sir?
Yes, sir. Yes, yes.
Yes, sir. Yes, sir.
Okay.
Please proceed.
Yes, sir. Changing, sir.
Okay.
Yes, sir.
Okay. So this auditing standard is a very the foundation of our profession, and currently we are in COVID environment, and there has been a delay in the tax audit filings and signing of tax audit and due date, and the economy has been on a standstill, and people have not been willing to come out and spend, and at the same time we have a situation where businesses also have to pump in money, liquidity. Both the government of India and the Reserve Bank of India are working together to see that liquidity is getting pumped into the system. But however, the spending has not gone so aggressively, except that last 2 months there has been a significant progress. And in this period, I will be happy to speak on this auditing standard. But traditionally, the auditing standard, as we see, one of the biggest area why this auditing standard is very important for all of us is the uniformity. By following a standard, we all, if we have about 2 lakh chartered accountants who are in practice, and everyone has to maintain the similar documentation. Uniformity is one of the important aspect, and we have something on quality. I remember very long time back, when some 40 years back, in my village, they used to take me to a nearby town and put an injection, and the doctor will put injection based on the syringe which is there in the hot water, and the same syringe he will use it on some 20 or 30 or 40 or 50 people. So that was the quality at that time. Today the quality has changed. So if you see the Reserve Bank and also the Security Exchange Board of India currently, they are talking about forensic audit mandatory and stuff like that. So quality, the auditing standards, by following auditing standards, our quality of our attached function is to be maintained and enhanced. So this is the uniformity, not only uniformity, but also quality. The third aspect is protection. If I have followed the auditing standard, I have performed the audit, and even something goes wrong after that also, I will be protected that I have done the audit in accordance with the prescribed standards of the ICAI. And the last one is the regulatory. That is, see, in in our Vedas, they say samadhana veda danda. So we have, unless we make it mandatory, people don't follow this. So the regulatory mandatorily requires you to follow these standards. And I can guarantee to you about the entire presentation will be summed up with some 10 documents. At the end of the session, I will have a case study, and so many standards are there for you to digest and go through that. The handout also is going to be circulated to you. But nevertheless, that end case study will about 10 documents will be good enough for you to follow with reference to mandatorily requiring. Now, the IFAC is working on a new auditing standards for the purpose of the not large entities, not so large entities. So they want to simplify these auditing standards. From India, we have Mr. Nilesh Vikemsai, who past president of the institute, is in that committee. So we have these auditing standards are the foundation for our signature when we are adding. So as an auditor, when we put our signature on the balance sheet, we increase the value of the financial statements. So this is one area where auditing standards really requires us to adopt the quality practices. So we have a huge set of standards, and these are all known to you. Most of you are practitioners. So I'm not. And yesterday we had some standards covered, and tomorrow some more standards are going to be covered. So this I'm not going to get into detail of these standards, but I will spend sufficient amount of time on certain specific standards. So this is sort of mandatory for members to, in practice, to follow the standards. So this is, and these standards are typically derived from the IFAC standards, International Federation of Accountants, and the IFAC standards typically standards on auditing, ISAs, International Standards on Auditing. From there, we India derive that, but Indian standards are far superior in my view from the beginning. So these are mandatory standards. Whenever we have general purpose financial statements, we need to follow these standards, and we have different set, as we see that as we go along. Also, we see different standards for different purposes. When we express opinion and reasonable assurance, we cannot say absolute assurance. We cannot give 100% that it is correct. We give a reasonable assurance. Corroborative evidence is also one more important policy which we follow, and materiality is one more concept which we are going through. And the standards follow a certain format, and these standards, I request it that these standards are all there in the ICI website, and you can easily download it and have a manual created in your office out of these standards. And these standards have to be mandatorily followed, and the documentation for departure has to be documented. Any reason for deviation has to be documented, and alternative procedures also has to be documented. If I'm unable to, for example, in the COVID environment, if we have not done certain procedures, the ICI has given certain relaxation in so on and so forth. How do we corroboratively we can validate the information? So alternative procedures in case if we are not able to do certain certain procedures. So again, there are standards on quality control. Firms, the firm level, and in peer review, I will be covering more for peer review concept, because tomorrow we have a speaker who will also deal with standard by standard. So though I don't know, each lecture is independent, I will be focusing on how you as a firm, you will cover compliance with the standards with reference to peer review when somebody is coming to your firm, because these entire slides which I have given to you is not from my side, but it is from the ICI side. These slides are from peer review board. So these slides are what is being used for the purpose of auditing standards. And so assurance services, and the main standard is the SQC, the standard on SQC. I will spend some time on the SQC standards on quality control. And many times I keep telling the members that don't take these standards as standards for the purpose of compliance for an audit. These SQC standards are the codified success formula given to grow your firm. If you follow these standards, you are going to grow your firm. Your firm, there is nothing which can stop from your firm from growing if you follow SQC standards on quality control, and the other standards as we go along. Each one of the standards on auditing, standards on review engagements. And I'll spend some time on this SQC, the quality control and quality control at the firm level, see, the firm is responsible. I'm sure that about 60% of the people attending this seminar are all sole proprietors. See, my view is, you need to move towards a firm, and I can tell you with I'm sure that more than half of you are married already. So when you have one partner only, you have so many problems. When you have one more partner in the office, how many more problems you will have? That is not a point. But as you grow as an organization, when you have an organization, and then you will be able to do a better service to the society as well as your client. So that is why this concept of firm is more important. And I have been I've been the secretary of AP Tax Bar Association, so I know how work gets referred from one firm to another firm in the practice. So it is a practice level and a firm level. So you need to have a consciousness to have quality, and you need to have consultation, collaborative arrangement with other chartered accountants in the practice in order to see that quality does not take any backseat. Quality should be the focus, and the firm has to grow. And firm, there are firms which are there for 100 years. So we need to. Our chartered accountancy profession has been there for even before the independence. So we need to see that as a firm. We create firm, and that firm will be there. Will be there beyond individuals. So this is quality. SQC provides a variety of codified secret success. And SQC, I'm going to spend time on SQC today. So all firms have to have quality control system. This is very important. There is no relaxation there. Firm and personnel comply with professional standards and regulatory as well as legal requirements. This is a very important wordings, regulatory and legal requirements. See, please understand, it is not only Companies Act. See, many times when we find the Society Registration Act, Cooperative Societies Act, LLP, Limited Liability Partnership, Trust Deeds. So, see, the firm and personnel comply with professional standards, regulatory and legal requirements. And anti-money laundering is one more example of how people have to comply with KYC norms in the case of banks. So when we do audit, and we need to know our clients. Many times we need to have files on our clients. So legal requirements, reports issued by partners are appropriate in the circumstance. So as we rightly see, we will be seeing the situations in which we have to discontinue engagements. So sometimes there may be situations where we don't need to associate ourselves with a client. So if you see in this pandemic period, for the past 6 months, about 30 and odd companies, NSE listed companies, auditors have resigned. So auditors have resigned for a variety of reasons, why and what. But it is very important for us to see that in the we issue reports appropriate in the circumstances. Many times the client will expect us to give a clean report, but the situation is otherwise. So we need to be more careful, because the trust with which the society looks at our financial statement is far superior than one single audit or one single client or one set of financial statement. This is very important. Quality standards we need to follow, and these are the areas. This SQC 1 gives following areas: the leadership responsibility for quality control, the ethical requirements, client acceptance and continuance. And then we have human resources. See, one of the poorly managed in majority of the firms is the fourth item for human resources. And if I have to reverse it and say successful firms who have been managing their quality as well as the growth of their firms have been very well managed because of the item number 4, human resources. And engagement, performance, and the last one is monitoring. So when people come for peer review, they don't only look at only technical standards. They look at quality standards at the firm level. So at the firm level, all of these aspects are also have to be looked at, not only the quality of the engagements. So I will take you through each one of these SQC 1 requirements. And there has to be a document for the quality policies, quality control policies, and objectives to be achieved therefrom, and communication across the firm. Communication across the firm among all the people, and you need to have training programs, and you need to have a regular feedback from people on the quality. So this SQC1 requires the firm to document, to communicate, to get trained, and to see that it is followed and feedback is obtained. So these are the areas which we need to take care. And the leadership responsibility for quality control is at the managing partner level. So you have a CEO or the managing partner, the person who is responsible for day-to-day operations of the firm as a whole. So you have multi-location firm, multi-C. In fact, I'm very happy to notice and mention that Singapore and Middle East, we have, in fact, members from our ICAI are there in the United States of America. You find there are firms who are operating across the globe, Indian firms. So you find the ICAI has ICAI's policies and quality procedures have become global. So the firm to design policies and procedures, promote internal culture, and not only that, when our clients also go global. You have companies like Infosys, companies like Wipro, company like Tata Consultancy Services. You have companies, Tata Steel has gone global. You have a huge number of companies. Airtel is in Africa. You find many companies across the globe. You have Reliance Industries distributing gas in other parts of the continent. So you have. So this culture, the quality culture, has to be the responsibility of the managing partner, and leaders to recognize quality procedures, business objective, HR policies to demonstrate quality. So quality should be the paramount focus, and the merit of the procedures followed and the regulatory policies and requirements of the ICAI has to be take priority over other things. Sufficient resources for development, document, and support quality policies and procedures. So it is very important for us. This is why the firm model helps you instead of sole proprietor model. So if you are more people coming together, you have more resources available for us to maintain this quality. And one of the biggest problem in our profession has been under delegation, and delegation has been a problem. People don't want to part with data. If you see prepared by, reviewed by, and approved by, and you should not depend on single client for your revenue. So you need to see that we are we come together and create a large firm, and we all delegate, and we trust each other to do their respective job. So this person delegated for QC responsibility by the managing partners who have sufficient experience, ability, authority to assume responsibility. So this is a very, I want each one of you, if you really want to grow your firm, I want you to take the printout of SQC1 and go through line by line and create checklists for compliance of these. And ethics is not something that you can give lecture on, but ethics is what you do when nobody is watching you. So ethical requirement, and when you look at yourself in the mirror, how you feel about what you do. You see, ethics is a very big area, and ethical requirement, if you see even yesterday, we have a huge 8,000 crore fraud coming in case of a bank. And we all do bank audit, and our signature is very highly exposed in the case of advances. And ethical requirements are part of this SQC1. And at the firm level, ethical requirements at the firm level, establish policies and procedures for ethics. And independence. You have one more area called independence, and that independence, whether we are related party, brother, sister, father-in-law, son-in-law. So when we will not get associated with financial statements where we are not independent. So when will not put signature on a situation where we are not independent with reference to a balance, a conflict of interest. And fundamental ethical principles are is given thing. The reason why our profession is held at a very high respect by the society is because of this integrity, objectivity, professional competence, and due care, confidentiality and professional behavior. So this area, the firm level, we need to have document very seriously. This has to be taken at the firm level. These are all the foundation. If we need to have documents and compliance with reference to this area. Independence. See, the ICAI requirement on independence is very clearly documented in SQC 1 as well as in the initial part of the standards. Establish policies and procedures with reasonable assurance that the maintenance of independence of. So in every audit, we need to have document on independence, whether that audit is conducted by people associated with the audit or at the firm level, at the practice level, and at the individual level. So we at the engagement level. So breach of independence has to be taken very seriously, and there is no compromise on independence. That Companies Act also has limits which have been prescribed, and we need to be extremely careful about the policies relating to independence and documented, and yearly compliance is mandatory according to the standards. Communication of independence and the culture has to come in. Every article clerk who comes into the firm, every new staff which is joining the firm, every new partner who is joining the firm have to be clearly told that this independence and this integrity is taken very seriously by the firm. We create a culture of quality, culture of culture of working together, because many times these policies get compromised because of one single person or because of certain new person joining the team who do not have understanding of how serious these matters are. So maintenance of independence of personnel, engagement partners to provide the firm relevant information about the client. See very clearly who are the owners of the client, who are the shareholders of the client, and what is the commercial transaction between the firm and the client. From notification of threat to independence, accumulation and communication of relevant to appropriate. For example, I remember way back, you can't be an auditor for Pepsi and Coke at the same time, and client will feel. I happened to meet one of the largest companies in the world, CFO, and I happened to be the only guy who knew that the CFO. So I had to give up my other account because the other account company is fighting with this client. So independence is not only on paper, it should be on perception also. So you cannot be the auditor of Coke as well as Pepsi simultaneously unless clients agree to do that. This is again perceived independence, and actual independence also is a very important area, and communication is very crucial. And annual written confirmation as the independent requirements. See, every year, every person in the team, every person in the firm has to write that they don't have any conflict, and it should be in the file. And this is taken very seriously, and I can tell you, based on my experience of peer review, one of the areas of concern for smaller firms, and we go and do, whereas bigger firms who are there for longer period have got very reasonable paperwork and compliance with reference to independent confirmations, but as a policy, this is a very big area for smaller firms to have independence requirements, and many times smaller firms come and say that how do you ensure that cost effective, is it worth doing all these things and all, but unless you do this, you can't grow to the next level. This is also a very important area to look at. So we need senior people to follow this assurance engagement, safeguard of reduced familiarity threat. Many times we say, I know the client, the client got an award, then she must be very ethical. Those cannot be excused. So you need to see that what we have to follow according to the standard, we need to follow. Tomorrow, nobody is going to come and protect you if you are not having document to support the signature which you are signing. So listed companies, again, documentation, preservation, and rotation of engagement partner. So this is another area. This is client acceptance and continuation. See, the firm should have policies and procedures for clients' acceptance and continuation. And we need to disassociate with clients who are having certain threats with reference to compliance with laws. And see, it is very important. In fact, I saw in the news item the other day that a particular chartered accountant was involved in some GST false claim of GST. See, we need to be very clear that what we do and what we clients do, and we need to put a Chinese wall between us and the client with reference to attest function. So this integrity, the documentation on clients' acceptance, continuation of clients is very important, because I'm very familiar, because I also part of the foreign auditing standards and international auditing standards. If the client, if the financial statements are fraudulent, false, fraudulent, and misleading, you are supposed to resign. You can't continue. You can't say, because it is by putting signature to that financial statement, we are going to be having problem than the client. So if the financial statements are false, fraudulent, and misleading, we need to withdraw from the engagement. That is a very clear-cut international standard. And if you have clients where you find that something, and I can tell you that you are all, many of you are practitioners in income tax, and I know that in some part of South India, income tax rates have happened in the past few weeks, because of some other, not necessarily to tax related matter, but some other matter. So we need to be careful with reference to be associated with certain clients, ethical requirements, and we need to see the reputational interests of our firm, our practice. And withdrawal is a very big area, and this has come as a subject matter of discussion. Even, I mean, from '94, I'm working with the Security Exchange Board, and we have that NISM, National Institute of Securities Market, and also the SEBI, BSE, NSE. You have when the auditor resigns, the type of things which take place on the balance sheet, particularly share price fall. There has been some questions on this, but the question is, the auditor's association with a client is much more important than anything else. So with our level of management, we have policies relating to withdrawal of engagement. When do you withdraw from an engagement? In fact, there are situations where we have not even started the engagement, and we had to withdraw because of different facts which are coming into situation when emerging after we accepted the engagement. The withdrawal is necessary, discussed with management, and also charged with governance, professional and regulatory measures not to withdraw. See, recently there has been guidelines by SEBI for auditors, whether one quarter to another quarter, what is the responsibility of the auditor to continue till what time and till what time. So again, how do you report such a withdrawal, things like that. So documentation of significant issues, consultation and conclusion. And this is a big area where the practitioner should pay some attention to this, particularly in the current situation of income tax rates which are happening in with reference to certain other matters other than basic tax laws. And this human resources, and I can tell you, if you are a practitioner who want to grow your firm, from 2003 or 5, I have been part of this growing professional services firm. A person by name David Meister has been my guiding force for how to grow firms. One of the biggest area for growing the firms is human resources. In fact, I had also addressed a doctors conference recently, and this exclusive one gives a very, very, very unknown, very poorly known secret here in the practice growth, which is called human resources. Establish policies, reasonable assurance, sufficient person with capabilities, competence, commitment of ethical principles. Your firm will grow if you are able to attract young talent and give them freedom, and also make them do work with reference to the competency with which they can grow the firm. With the technology coming in, and this is the only way by which a firm can grow. Enable the firm partners to issue reports appropriate in multidisciplinary firms have come, and you have the ICA has relaxed the so-called firm, what is the type of firms which we can do. That detailed guidelines are awaited. But this SQC1 gives lot of items: the recruitment, attracting talent, retaining talent, performance evaluation, capabilities. What are the capabilities which one has to possess? Competence of the professional, whether you are doing CPE, continuing professional education on a regular basis, career development, how are you going to move? You know, you will be initially maybe an audit, and then you may move to tax, you may do consulting, you may do, you know, strategy consulting. Nowadays you have cyber security and, you know, information system audit and forensic audit, the career development and career growth of the firms, promotion of the people, how do you promote people, how do you keep them motivated to remain in the profession. Compensation has been one of the biggest concern, and compensation is also one matter which our profession is struggling to compete with the industry, because the moment a particular level of childhood rate is going up and the client wants to hire you, or if you have if they see a fire in the belly, they want to keep you on their side rather than keeping you on the profession side. Compensation is one more area where ICA has been working on for a long time. You know, committee for members in the industry, we have been trying to keep on increasing our compensation for our professionals in the practice side more. Estimate of for personal needs. Keep on. We need to keep motivating employee engagement. You know, so with so much of foreign investment coming in the past 6 months, 3 months, and it has been struggle for us to retain people in Bombay and other parts of metro city, because people are working from home. The recruiter also comes to the home and hires the people. Corporates also come to the house and hire people. So these are the broad areas. So the firm has to have HR practices which are world class, and these are all given in SQC1. And the next area is assignment of team engagement team. And whenever, you know, it is important that every engagement is led by a partner and who is senior enough to handle that engagement. And policies and procedures are there for having the team meeting. You have identified role of engagement partner, communicated to all the people, because sometimes the engagements are so large, even some 3-4 partners or 5-6 partners are not sufficient. You know, in fact, I have been part of global engagement, so we work on 80-60 countries, 40 countries. So different. In fact, there may be partners who do not speak English also. So I mean, some of those part of European part of the world, we have partners who speak in their language. We need translation issues. So engagement partner is capable and competent, has time and authority for the engagement. The responsibility of engagement are clearly defined and communicated to him. This is a very big area for how do you manage. In fact, when large companies come and look at you to hire their firm for engaging you, they see all these aspects, whether how organized you are, how well you manage, and how well you have Chinese wall. I cannot have information passed on from one group to another group about when they are fighting in the marketplace for something else. Assignment of staff and assignment of capability and competence. How do you train staff? This is one more area, training of staff. So this engagement quality standard, EQC, SQC, particularly standards on quality control is a very important standard on these aspects. And the next area is called engagement performance. Engagement performance, see, once you get into a specific engagement, each engagement, how do you go about it? Okay, policies and procedures complying with professional standard for that engagement. If I have been appointed as an auditor of a particular company, how do I have a file system and document? How do I maintain that particular thing? These are all each engagement, compliance with laws and regulation, engagement partner issues reports appropriate in the briefing on engagement teams. Are you having meeting, planning meeting, regular staff assignment, weekly meetings, monthly meetings, review at the client place, process of complying with engagement standards, the process of supervision. See, every working paper has to be prepared by a person, reviewed by a person, and approved by another person. So supervision, staff and training and coaching. See, many times we find members coming to ICA and attending the conference, but what have you done at your firm level? Have you passed on this information and knowledge to the firm? People who are down the line, people who are there in your office, people who are doing day-to-day work. This is another area. Methods of reviewing work, judgments, and form of reports. How do you document the judgments which are in that engagement? In each engagement you have judgments. Appropriate documentation of work performed, of timing, nature, and extent of review. Process to keep all policies and procedures current. Updation every time. You find the last 3 months you have a new PLI scheme, production linked incentive scheme of Government of India. Pharmaceutical industry alone, about 253 companies have applied for PLI scheme, and cabinet has expanded to another 10 companies. So you find what are the latest things which are happening here with reference to areas of government's focus and relating to clients. This is one more area where I find many firms lacking, supervision, review, consultation. Yeah, how are you supervising an audit? See, many of you may say that I'm the only person, I'm the sole proprietor, but definitely you will have a third-year article, you have a second-year article, you have a first-year article, you have a semi-qualified, you have a qualified assistant. We need to have processes in place on supervision, review, and consultation. And if it permits you develop another chartered accountant outside your office who will come and review for 1 day, you ask him to come and look at the file for 1 day before you sign the report. What is preventing you from not doing it? Many times people say, no, I'm a sole proprietor. How will I do that? There is not growing. You can find 1,000 excuses for not growing your firm. But when you have a bigger client and you have a listed company, you have a larger company, you have 500 crore. I know partnership firm, sole proprietor is having 600 crore revenue. Sole proprietor having 600 crore revenue. So you need to audit it, and you need to have processes in place for such a financial statement. And you can always request one of your friends who is also practicing in the same city to come and sit with you and offer your file for review. Nothing wrong. Consultation. You should have policies for consultation, documentation, consulting, and we all differ. A difference of opinion has to be documented. If you the same matter it can be viewed in the 3 different matters. But what is finally we would have agreed on one particular stand depending on the facts and circumstances of the case and the reason according to the accounting standard or auditing standard or according to the legal position. So this has to be documented. Consultation and difference of opinion between the management and the auditor can be documented. It is fine to have a difference of opinion with the management, but if the implication is not very big, you may document it and proceed with the opinion, clean opinion. So engagement quality review, nature, timing, and extent of reviews, and eligibility criteria for equity reviewer, documentation of equity review. This is a very serious process. Every year, each engagement, quality control review, how you get it done at the firm level every year. So this is a very important and documentation, assembly of audit file. So every engagement, how are you keeping a file? I can tell you that there are some chartered accountants who do not know which balance sheet they signed and when, because their last minute client comes and somebody else sends the accounts to us and we sign and send it off, put the stamp. And sometimes they only have the stamp and they only have the letterhead. This is not accepted according to the auditing standard. You are supposed to have a file for every audit of significant size and nature for you to have, say, assembly of audit file, confidentiality, safe custody of files, accessibility of engagement documentation. Many times, if you ask the auditor, he says, no, that company, in that company that there is a room and that room is given to us. But if you go to that room, everything other than audit files are there. If you ask where is audit file, then it will be elsewhere, somewhere else. They'll say, no, we have put it in some go down. So accessibility and document prevention, document retention, and document ownership. This is a very big area. Document ownership is again a big area. It is our property. The financial statements and the audit papers are that of the auditor, not that of the client. So this is a very big area, and we have some regulation, and we have number of years for which this document has to be kept by the auditor. Document retention rules are there, and they are very serious and stringent. And the next area is monitoring. Monitoring of engagement. This is a very big area, and I feel that the sole proprietors have to take this seriously and bring at least 2 more partners into the firm. Somebody can specialize in audit, somebody can specialize in income tax, somebody can specialize in internal audit, somebody can specialize in corporate audit, statutory audit. So it is very important for us to grow the firm. Monitoring of engagement, audit engagement is a mandatory under SQC. So whether reasonable policies that relevant, whether monitoring is relevant, whether you have policies on monitoring the engagement, quality on an ongoing basis, monitoring and periodic inspection of compliance, complete assessment. So you have multi locations. So you have in multiple locations, you have firms. One person can go to the other branch and monitor. So monitoring of engagement, how it is communicated, how we sit and discuss the quality aspect. In fact, and I've been privileged to attend a lot of partner meetings of many firms across the practice, and many firms are having discipline to have partners meetings, and they bring in external experts like us and then discuss openly the challenges which they are facing in fact, I have been part of many such firms for the past more than 10 years. This is a very big area. You need to have monitoring and open communication. This is, we call it as this is open. We have to have that candor. We need to, nothing wrong in having problems, but we should share the problems and see that the solution emerges. Description of monitoring procedures performed, conclusion drawn from monitoring procedures. What are the deficiencies which are there? And for networking, this is another big area. Networking of firms guidelines have been given by ICAI, but when it comes to quality, when it comes to audit engagement performance, we need to see that this SQC standards are met. At least annually, the network gets together and reviews the files. Suppose there is next year we are having NPA write-offs. We are having, for example, now 1 year, this moratorium period of insolvency period has been moratorium. But once we have this lifted, you will have more NPAs coming and more frauds coming out. So, but as a part of network, how are you going to address these type of things? So, regular meeting with the network partners, advanced communication. For example, this CARO has been deferred. So, but CARO checklist has to be ready. CARO implementation plan has to be there. Things like that have to come into place. And I'm very proud that ICAI has come out with quite a bit of even in this pandemic, the tax audit checklist has been updated by the ICAI. So many branches of ICAI members have come together and worked, and peer review, quality control review. So all types of work, across the profession, work is being shared by the member firms in the profession. So engagement partners in the network, creating a network, maintaining the network, making the network partners happy and work together is a very interesting area. And I want you to create that networks, and you need to be part of that network. You'll feel very, very happy about, and your quality will reach, very highest standards in the profession. Then comes documentation. What is not documented is not done according to our standards. So documentation has to get priority, and we will talk. In the next few hours. We still have a lot of time, and I will explain you documentation, policies, and procedures for documentation. Provide evidence of operations of each element of QC system. So you need to have, for size of the firm, number of offices, the degree of authority attached to personnel and offices they have, nature and complexity of the firm's practice. So this is one area. Whenever you are having your firm, or when you have your friend's firm, or when you are going to review another practice unit as a peer reviewer, you need to see the size and nature of clients and the type of staff who are there. But nevertheless, nothing is going to, you are not going to be excused for because of the size. You have to have documentation. And I can tell you that making this documentation is very easy. In fact, Our institute has come out with checklist periodically, and Bombay Chartered Accountants Society has a checklist, detailed checklist. And for every standards, after the standard, you have detailed checklists and questionnaire which is there, so which will provide you some sort of a guidance when to create your own documentation at your firm level. So time period sufficient to permit evaluation of firm's compliance with reference to QC, longer period if reviewed by the law. So I'll not dwell on certain topics which are more of procedure in nature, but I will go into important aspects. I want all of you to take some oath. How many of you have engagement letter in your file? How many of you have engagement letter in your file? See, every engagement has to have an engagement letter. That should have a terms of engagement and these characteristics of the engagement, criteria, needs of intended user. So this engagement letter is a very big area, engagement documentation, and I can only tell you so engagement standards, see, this is, we are moving from SQC standard to an engagement standard. So engagement standards fall under these categories. But these documents, I think yesterday some standards have been covered, tomorrow some standards are covered, but today I will cover some critical standards. And at the end of today's standard, you don't need to go here and there to different places to see compliance. Only one single set of documents will take care of everything. Okay, so that is my thought process. I have some case studies at the end which will clearly demonstrate that you don't need to refer to some 300 pages or 500 pages. One single page, you can have 1, 2, 3, 4, 5. These are the documents which are required for the purpose of compliance under auditing standards. So these standards are there. I will be elaborating on each of these for the next 1 or 2 hours. This is one advantage of not being a speaker, because speaker means he has to work for the next 2 hours and 3 hours. But when you are in online, you can be free and you can switch it off, or you can keep it on silent mode and you can be doing other things, whereas the speaker has to do his job. Okay, basic principles governing an audit. This is, I'm sure that some of you who are there in this conference is seeing first time this document after some seminars where you would have seen, and some of you would have studied it when you are doing some chartered accountancy, both intermediate and final. But today, if I am an auditor and this balance sheet is coming to me, and I put my signature and then give to some third-party banker or some income tax officer. See, the document before my signature is having low value, and document after my signature is having a higher value. See, this is where people have to understand this particular standard, basic principles governing an audit. See, at the end of the day, if you see the auditors, we are, see, and in fact, I was put it in a big tight spot sometime back, when GST was announced. Somebody told that the signature of our Prime Minister told the signature of Chartered Accountant is more powerful than the signature of the Prime Minister of India. But if you see the AGM regulation, the auditor is supposed to read out. The word of auditor is more powerful, more than his signature. See, this is where the government of India, Prime Minister, President, and the ministers, everybody looked up to our profession, because they find that we are the most well-equipped people to give advice. In fact, our ICAI has already given the pre-budget memorandum document, 250 plus pages document has already been submitted to Government of India. It is very important for us to follow this, because we are following these principles. Our profession has a solid reputation, and the financial statement have a higher value when it goes with our signature. See, this is what I was telling you, that many of us don't even have engagement letter. See, we need to have an engagement letter for every audit, every serious work which we have. We should have a standard letter. We need to have a standard letter which will say that and acceptance of that. We accept it, we get it from letterhead, and we agree, and we sign, and we give. And this we need to make it very clear. So this avoids the misunderstanding between the client and the auditor. So this is very important. This standard is not at all followed, and many times people come and do this engagement. I have seen in my practice unit reviews, they do it only when there is a practice review, not otherwise. See, not only when there is a peer review. This is a very, very important document, engagement letter, and this engagement letter should have all this content and nature of audit, what under what act, under what regulation, and make it very clear. Even though we are involved, sometimes we are very, in a very subtle manner, we are involved in preparing the financial statement, but it is the responsibility of the client, not us, not our auditor. Unrestricted access to records and information. Many times, see, this is what I find after doing income tax read, and I have been also in income tax practice for about some time, and I keep getting involved in some income tax matters once in a while, and also in transfer pricing. But client will inform you only after start doing certain things, only when he is getting caught. See, this is very important for us. We need to discipline our clients that what they should do is their job, and what we should do is our job. See, many times, many auditors have not grown, or many auditors are having health problems because they tell the client that you don't worry, we will take care of everything. What we will take care of everything? We cannot go to ICU because of some inefficiency of our clients. We need to see that the preparation of financial statement is that of the client, not to our responsibility. See, after client grows beyond some size, they should have their own accountants, and they should have competent accountants, and we should go and look into what they're doing there, and we should have documentation to ensure that the reconciliations are performed, trial balance, and each schedule is being prepared. See, unrestricted access to records and information. Audit process is subject to, see, one of the important paperwork and paragraph in the engagement letter is that the auditor's files can be peer reviewed by some other firm, and at that time the auditor has to show these papers to some other auditor. So this is very important. This should be part of your engagement letter. So fees and billing arrangements, planning arrangements, reference to management representations, internal auditors. See, I find that sometimes auditors don't give importance to internal audit. You need to see that internal audit is done. Internal audit is independent of the stat audit. So statutory auditor, and see that that is relied upon by the statutory auditor. Other auditors, branch auditors, experts. There is no shortcut to quality. See, this is one area where we have to discipline ourselves, and I find I know that they are recording this lecture, but I can tell you that this standard compliance with standard has to drastically go up in smaller firms. So this is a very important area, because everything starts from small. It is not doesn't start from something big. You start small and then you build on your quality. So, but the standard gives you some flexibility. It says that you don't need to do every year, but my view is every engagement, every year, in every engagement, you should have an engagement letter. So that is very important. Factors to be considered: sending new letter every year, changes in terms of engagement before completing the audit of different level of assurance. Suppose you did audit, but you wanted to extend it to an investigation. Then how you do that? All those things have to be. So there is a quality control at the engagement level. You have some separate standards, but again, the delegation, consultation, skill, and competence. So all these are part at the engagement level. I'm not going to go through that, but there is a standard on this, and individual audit level, direction, supervision, review. I can tell you that those who are sole proprietors, those who are one partner firm or two partner firm, or you have only 2-3 people there in the firm and working on it, please see that you have paperwork to take care of all these aspects: delegation, review, supervision, consultation, acceptance, retention, monitoring. These are all at the quality level, at the engagement level. These are engagement standards, so firm level as well as Then we get into the next area, that is the documentation side. See, the auditing standards, finally is about evidence evaluation. Finally, what auditor we do evidence evaluation, right? We have received sufficient evidence and appropriate evidence. So that documentation, if it is not there in place, that means as good as we have not done the audit. See, this regulatory review has been so very stringent of late, and I've been seeing this for the past from the time I came into the profession. Even much before I came into the profession and as a student and BCom myself, I've seen that the audit firms are collapsing because of poor. If the company has a going concern problem, and auditor will have a going concern problem if he is not able to identify that problem. So this documentation is the gold standard, and documentation of work performed, nature of work, timing of work, extent of audit work, and you have to have a timely. Your file has to be up to date, and your retention period. You have done some slight relaxation here for 7 years in certain cases. So you have to, for every area which is material and which is significant, you are supposed to have work done, audit procedures performed, nature, timing, and extent of audit procedures, relevant audit abstain, conclusions reached. This is a must. So you need to have audit procedures, you need to have audit programs, and evidence of work done. So evidence of work done has to be documented. So if you have not got, if I have a turnover of 60 crore, I need to know how I validated the 60 crore, how many invoices I checked, how much dispatch I have done, how much input output I have validated, what are the receivables, who are the customers, how did the money come back, how did they complete work in progress, opening plus closing stock, opening production, closing stock, and final reconciliation. Conclusion, this is very important. Working papers are the foundation. This is, we call it as audit documentation working papers of work done, performance of audit. The document, this is a very big document, and in each audit, these documents constitute about 65% of work done. This of documentation, total documentation, audit documentation of procedures performed. What is the relevant audit evidence? Now everything is in electronic form. It is changing every day. You are changing. In fact, you have virtual reality, and we have different technology which is coming. Sometimes you may be fooled by the client. So you need to be careful about what you are doing. And conclusions reached. Many times we find documents available for 1 and 2, not 3. Conclusion reached. People are not. How have you concluded that all sales have been accounted, all production has been reconciled, all production has been actually produced? So this is a very big area. So this documentation needs to be sufficient. Document has to be available for having done the work. This is a very important area. I can only tell you. See, I was doing some work for a bank which had about 60 or even more, 60,000 crore NPA, non-performing assets. And they are asking that how these auditors have done, as though the stock statement and annual accounts are not been seen by the banker. See, please understand, when things go wrong, when promoters fight, when loan becomes bad, when fraud comes, they will all come to auditor only. See, they will say, what auditor? First person to be questioned is auditor, and first document they will see is where is the audit file, or what has the auditor done. So this particular slide, you please take a screenshot of this and see that it is followed in your office like a Bible. See, this is very important. You need to have documents on this. So auditors' responsibility to prepare audit documentation for the audit should be historical information with reference to laws and regulation, and so this is very important. Where and all it will help. It will help in planning. Documentation helps you in planning. Documentation helps you in planning, supervision, and definitely we are going to have a break around 6:30. we'll have a 10-minute break and reassemble. We have another 20 minutes time. We will cover some standards and then move on to this documentation will help in planning and performing and quality review matters of continuous significant information evidence for conclusion and assisting external institutions. This documentation standard is the very important standard. It is helping in many aspects like planning, audit procedures, direction supervision, with reference to compliance with laws, quality control review, prepared by, reviewed by, approved by in each section of audit file. So this audit continuing significance throughout, from the beginning of the audit, end of the audit, this audit documentation is very important. So this is about documentation, those communication of matters with those charged with governance. See, I can tell you tomorrow, I think your speaker, there is a speaker who is going to give some highlights on NFRA. I can only tell you after NFRA has come in place, the profession has come under a lot of scrutiny. See, I have been fortunate to train CIGs when they go for audit of people in World Bank, when they go for internationally to do audit across the globe of World Bank, other parts of the world, to do audit, we have been helping them to comply with auditing standard across the globe as part of ICI. So we train the CIGs. But when a regulator comes into your office and goes through your records, what he looks at it is totally different. He wants to have a feel of going through your papers. By going through your papers, you should have a feeling that you have done your work. You don't need to even talk. You don't need to be there. You don't need to be even anywhere near that place. But your file should speak. This is what NFRA is demanding. That means if this is a reality today, see, I can tell you that in the case of our profession, the documentation for small and medium audits have to undergo a drastic improvement with reference to auditing standard compliance, right from engagement letter, right from that year file. And I am sure, see, I know one thing for sure. When we go for income tax assessment after 3 years, after 2 years, the only person which a client depends on to produce the document and give it to the income tax officer is auditor. That is the level of confidence which we are enjoying. Why not we do the same thing when it comes to keeping the file for the purpose of another peer review? We should have. Wait, I am quite proud of our profession that way, because for those matters, the client depend on us. I remember when the trust deed has to be made available for income tax 12A or whatever the section. The only place where they could find most of the trust original documents are from the auditor's office. Every chartered accountant had that document, even though it is 30-year, 40-year old. So this is very important, compliance with the documentation on each of these aspects. And whenever there is an inconsistency between some observation by auditor and client, those things also have to be documented, and those items have to be part of this. See, this is one more area where I want to highlight to you that with reference to laws and regulation, if laws and regulation non-compliance is there, auditor being part of the engagement, he gets questioned by the regulator more thoroughly, and whether you are part of that irregularity or illegal activity. So this is a very big area. We need to only documentation will protect us when it comes. So then this big area, this is fraud. I'm not deliberately going to cover on this matter today, but see, this responsibility relating to fraud, the primary responsibility of the fraud is to detect the fraud and prevent the fraud is that of the management. But all the time we end up, I remember an audit where we are doing some audit and we found morning 300 workers should have had tea, evening 300 workers should have had tea, but some 1200 people are having tea. That means a huge fraud is sitting there. even smallest of the item, you find frauds which are there. In fact, so one auditor took this fraud matter so seriously. One auditor and one article clerk in one part of India, coal mines, they found there's a big fraud in the coal mine gate where the coal is getting dispatched. So they went and they never came back. So see, frauds are so dangerous for the life of our individuals, but you have to be careful about it. The primary responsibility of identifying fraud or ensuring fraud doesn't take place is that of the management. But as a statutory auditor, if you find the fraud has been committed or some, in fact, I remember one audit where the company has not paid salary for 6 months. And my staff, audit staff, for the past 2 months are going every day to a 5-star hotel. I said there is something wrong in this company because they have not paid salary for 6 months. How can they afford to pay my staff 5-star hotel salary, a 5-star hotel lunch every day? There is something wrong. So you see, very important. As an auditor, you need to get into the smallest of the items, and that will show biggest of the frauds. The theft of assets, misappropriation of assets, fraudulent financial reporting, intentional omission of amounts. See, with the stock prices going up and with stock prices stakes, see, the turnover of company is only 800 crore. Market capitalization of the company is 3,000 crore. See, you have very serious reasons why fraud can be committed in the financial statements, but we need, as auditors, we need to be vigilant and we need to see that we are, because at the end of the day, when we put our signature, the balance sheet and P&L account have a better value with reference to the purpose for which the financial statements have been prepared. So material risk, so one of the areas, auditors, we need to see that the audit procedures are designed, though there is a separate session tomorrow, but I will cover this today because as part of my presentation, you need to take care in your audit procedures if there are some fraud, and if there is if you come across some indications of fraud, you need to elaborate, and this is one of the reasons why audit fees cannot be taken as a base for the purpose of you have to express an opinion. You may get an audit fees of some 10 lakhs, but suppose if you go into the audit and find that the work involved and you have to do some more work and some more months of work and you can't come out, you need to negotiate again with the client and say that this is taking more time. So that becomes scope limitation under certain situation. So sufficient appropriate audit evidence assess this, respond to appropriately identified suspected fraud. See, this is a very important standard, and with forensic audit and the economic turbulence which are happening, so we need to be careful about the potential exposure of the reasons for fraud in the financial statements and what is our responsibility, particularly in the current situation, because cash flows are, see, whatever you do, please ensure that your clients are sitting on cash. See, one of the important area is that I have seen over 30 years and I have seen the financials of, I have seen the business history of more than 200 years. I have seen history. I can only tell you those companies which do not have cash have died. So that please advise your clients, help your clients to sit on cash. This is a very important support you can provide to them. And of course, when not at any cost, but we need to see as auditors what is our responsibility on this situation. Intentional act, it should be intentional, one or more persons use of, see, for example, I remember one fraud where some 25 years or 30 years, people have been doing some every day, some 300 rupees medical bills they will inflate in a factory. And when it came to eventually, when they so out of 3 people who are working together, one fellow retired. So when the new person came, that fellow is not cooperating with the old 2 people who are about to retire. So the fraud came out, and that one fraud, the cumulative impact of fraud is 1 year profit and loss account P&L profit, net profit of more than 1 year's net profit. That is, the fraud has been going on for such a long time. So this is a very big area. So we need to be incentive to pressure to commit fraud, provide opportunity for fraud, because many times when controls are not working, you allow people to do fraud. So you say, okay, you don't even pay attention to certain things, then people will be motivated to do fraud. This is again, you need to warn them. In fact, I remember many cases I have issued management letters where the bank statement is not been, original bank statement has not been obtained for bank reconciliation statement, and only photocopy has come, and that to handwritten copy. Then we found promptly some 3-4 years frauds are sitting there, but luckily we have issued management letter to say that there is no original copy of balance confirmation, original copy of bank statement, and see, internal control overridden. See, you need to allow, if everything is decided by one person, you need to study whether there is a risk of fraud or not. You can't say no, he is the only person. Then what is it? What is the point in you going as a professional? So then, see, professional skepticism is a very big area. We need to keep looking at potential for misstatements and frauds. Discussion with engagement team, identification, see, responses to material, evaluation of audit evidence, auditor unable to continue the engagement. So this is a very big area. Communication with the regulatory authorities. Sometimes you may go. In fact, I remember one audit where I used to think that either I will be killed or whether the company's accounts department fire will go, fire will destroy the records. You need to see that, sometimes when you come across frauds, communication with regulatory authorities becomes a big challenge. And you need to tell that guy on the face that he is a fraud, or some management fraud. Basically, I'm talking about. So public interest becomes very more important than your own interest and client interest. So these are all the practical issues. So you need to address it while doing that. So auditor fraud is a very big area. This is why this you have situations of financial meltdown or issues of matters where there is real estate fraud or funds getting diverted or issues of a lot of concealment and fraudulent things happening. So then the next area is when the laws and regulation. See, this is a very tricky standard, but I will tell you that there may be situations which will make you to go to a regulator than to the client, because the client is complying. So in fact, I was told that a particular income tax raid happened not because of Income Tax Act, but because of some other law non-compliance with some other law, because somebody committed suicide and things like that. So see, we need to be careful about this as auditor, because we are privy to information. We go to the client, we interface with the client, and laws and regulation compliance that of the client. But if we come across non-compliance or violation of non-compliance, this standard will provide you guidelines on how to take about it. Yes. See, we are not responsible. While see, this is a very tricky standard. See, auditor is not responsible for preventing our compliance. See, we cannot be expected to detect all non-compliance with laws and regulation. However, we come across some of this. We need to see, exercise professional skepticism and specific procedures to find out what is the impact. And we need to report to the people who are charged with governance. And in certain appropriate situation, we need to see how we need to proceed. And I request you to, in situations which are very crucial in this, we may have to resign. See, again, certain situation may warrant us to write to the regulator, but those are all very exceptional. But however, one has to look into the practical situations here. So I'll give you about 10 minutes time. Let us take a break. Is it okay now, or you want some? Hello, sir. Hello.
Yes, Shakilar sir.
So shall we take a break now, sir? 10 minutes?
Yes, sir. We'll take a break for 5 minutes, sir, because it's been 1.5 hours.
Yeah. Okay, 5
So it
minutes
is
break now.
24. 6:30 we resume back, sir.
Yeah. Yes.
Or we just start with 5 minutes regular, sir.
Yeah, 5 minutes break. After that, I'll start.
6:25 is the time now. 6:30 will resume again, sir.
Yes. Thank you.
Yes, Shakila, sir.
You can start, sir.
Yes, sir. Yes, sir. Please continue, sir.
Okay. But slide is there, no, on the screen?
Yes, it is there, sir. Can you just move and check?
Yeah, I'll manage that.
Okay.
Okay. See, I was
Sir, I think you need to share it again. Yeah.
coming.
Yeah, now it has come, sir. Can you just move and see if it is working? No,
It's
it
not
went
moving.
off, sir, again. Okay.
We'll see.
Now it's
I'll try.
Now it's visible, so you can continue.
No, the slides are not moving page to page.
Just click on the slide anywhere and you can just try it out. Rather than clicking on that application. Now it's moving, sir. Now it's moving. You can move.
Okay.
Yeah. No. Okay.
Okay. So the next standard is those communication of matters those charged with governance. 260. See, after audit is done, every year we need to have this standard requires that we communicate with those who are charged with governance. That is predominantly board of directors in the case of a company, but in the case of others, with other people like managing partner of a firm or the chief executive of a managing director of a or managing partner or managing person who is in charge of the management of the company. So you have a detailed standard which requires the auditor to communicate. So this is a very important systematically. See, when you prepare an audit file for each area, like property, plant and equipment, for revenue, for sundry debtors, for sundry creditors, for bank reconciliation statements, cash and bank investments, or each area of P&L account. At the end of the thing, you need to communicate one document, single document to those who are charged with governance. You need to address a letter, what you did during the audit. This standard is a very important standard, and this is one of the areas which I find in practice many firms have given up because of information technology. They say, oh, we attended the board meeting, we met the audit committee, we gave a presentation to audit committee. Those are secondary, but as an auditor, you need to communicate with the management and see that important aspects are communicated through to the communication with those charged with governance. What is your responsibility? What is the things which you did? What are the issues which you came across? How it got resolved? What are the significant adjustments which happened during arising out of the audit? What are the significant unadjusted areas? And this charge with governance is a two-way process. You know, this you not only at the end you do, but you do an ongoing thing. In fact, I know many of these highly demanding clients where the audit committee as well as the chief executive officer and the managing director, the CFO who is a director of finance. This is an ongoing thing, and you need to keep on having some regular interaction and communication. And you should capture the condensed version also should be in the file. This is particularly in situations of large listed companies where whistleblowing is a common thing or things are very sensitive in nature. So this becomes very critical. Oral communication is not adequate. Communicating in writing is very important. See, recently NFRA, in fact, NFRA is currently working on releasing some more. Regulator is looking at our audit profession very seriously now. So written communication, oral communication, and all matters. If you see the observations of NFRA recently, they are going and reviewing even computer controls, computer audit, and things like that. Written communication need not include all matters that arose during the tenure of the auditor. Communication with those on a timely basis. This is very important. So this is a very important takeaway from this meeting today. I request all of you to make a note in your thing that no audit of a significant size of your company, your audit firm, should get completed without a communication to the management about the matters which are covered during the audit. This is a deliverable which has to be part of the audit file, and this is a requirement of the audit. This is a very important requirement, and I can tell you that about 60% of the cases of practicing units, this document will come only after we insist where is the document. It will not come upfront when we go start the peer review. Joint audits, and I can tell you in joint audit, including bank audits, see, this document has to be there. See, mutually divided the areas of work, jointly it has to be documented. The standard requires you to document and share, have the work of joint audit and which areas are doing whom and how it is being done. And I'm sure that most of you who are sitting today in this conference are bank auditors and auditors of branches, and as well as head office and central statutory audits of banks, and also stock audits, and also what is known as concurrent audits, where you have share the work with others. So this is very important, joint audit. So joint audit responsibility have to be agreed upon, communicated to the client, communicated to the other auditor, and this is a must. And we need to have regular communication, way of issues, judgments involved, decisions taken, matters addressed, matters unadjusted errors, and what are the matters which are going to be reported to the management jointly. These things have to be together, and it should be there in the part of the standard. And risk assessment is a very big area. I feel that we need to spend about full day or even 3-4 days only on risk assessment, but I will touch upon this because this is also interrelated to controls, and there are quite a bit of standards here. Risk assessments and assessment of manager risk, and please take this matter seriously with your clients, and don't tell them that. See, many times this risk assessment, internal control evaluation, all are told by the auditor to the client as though it is all requirement of an auditing standard. No. These are all necessary for the client to do them by themselves for the purpose of growing their company and seeing their company is on track and their performance is on track without closing the unit. We need to make it very clear to the client that these standards, these internal control, risk assessment, other things are part of their thing, and we will go through that as we go along. We will see that. When we do an audit, there has to be a document for planning, and many times when we do planning will take care of about if you do planning very well, your profits of that engagement will be taken care. If you don't do planning, you will be a disaster. It will become a loss. An audit will become a loss. So my view is planning helps you to execute the engagements much better. And you should have a document for, once you do planning, you should have a document for planning that engagement, and that when will you do, what type of audit procedures you will do, what type of audit is being covered under which law, and what type of things. See, this standard on planning is a must. Planning has to be done much before, immediately within 2 months or 1 month from the date of appointment. Your document on planning should be ready, and you should have meeting with your staff, meeting with your client, nature and timing of audit procedures, which audit procedures we will perform when. So this planning is a very big detailed exercise, and I feel who are the team members who are going to get involved, preliminary engagement activities, what are the procedures, what are the types of business environment matters, control environment matters, planning activities, what are all the various nature, timing and extent of audit procedures which will be performed, documentation, overall audit strategy, audit plan. How are you going to do? Are you going to do a detailed audit during the interim period, or are you going to do after the year end? So those things are part of audit strategy, and significant changes to overall audit strategy when compared to the last year. Suppose if this is audit which you have been doing for the past 3 years, and now you find that you have already done a good job and the client is also stable, you may do less detailed audit procedures. You may try to rely on controls, and then you may do more less of internal control testing. So you need to take a call according to the year in which you are doing, according to the period of audit. Additional considerations of initial audit engagements. So first time you have been appointed, you may have to work with the previous auditor and also opening balance audit, and your audit strategy may differ if it is the first time you have been appointed. So this audit planning is I find about 30 to 40% of the time should go in planning of the total audit time. If you do it well, the quality of audit will substantially increase if you do planning very well. So you need to have a document in writing, and that document by the end of the session I will show you in that case study what document should be there for planning. Planning should say which under what law you are doing audit, who will be the key engagement partner, when you will do the engagement. So you have a very set of detailed document for planning, and these are the areas. These 5 areas will come there. So understanding the entity and its environment. See, understanding the entity and environment is a very important area. So you need to see what type of entity is there, what type of environment in which it is operating, what its internal controls are there, how those internal controls are working. See, identify what is the potential material misstatements which are likely to happen in that area. So this is a very detailed standard on how you go about understanding the entity, identify risk of material misstatements, whether there will be frauds, there will be errors, financial statements at a different level, design and implement a response to assess the risk. So audit finally is risk assessment procedures, different. These standards are there for inquiry, observation, analytical review procedures. You have a risk assessment process which is detailed through the standard, and the environment in which the entity is operating, what is the nature of industry, nature of entity, what are the various objectives which are there, what type of business objectives are there, how those objectives will be achieved through variety of controls, and what type of accounting policies are there, and financial performance, how regularly. In fact, I remember one company or few groups of companies, then nobody comes into the factory. They're all in some 3,000 miles away, and they don't come for even 10 years also, because that factory is managed independently by a set of people here. So better, the control environment is very strong. And because every shift, every truck which goes inside and comes out is known to the Babu there in some part of the world, some part of the India. So this is highly controlled, highly regulated environment and regulated situation. So you need to figure out, there are industries where there can be a huge amount of challenges because of no control. So industry and what type of industry it is, what type of regulatory environment which is there, external factors. So you need to factor all these things and have document to assess this. See, I find many of us, the successful auditor and not so successful auditor, successful accountant and not so successful accountant, successful CFO and not so successful CFO. I find this one internal control. I find internal control helps. If a company follows internal control, it in all probability it will succeed and it will outlive the original stated period of its existence. My view is this internal control standard should not be viewed as compliance with the law or compliance with an accounting or auditing procedure. It is the codified growth formula given to each of the businesses, and I can tell you that whether it is Krishna Sweets, Mysore Pak, or somebody else, a single product, or Thali which was sold by Saravana Bhavan, but the internal control is the key success for growth of companies. So that we need to make it very clear to clients and say that if you have internal controls, your company will do well and your business objectives will be achieved, and the probability of you incurring a loss or fraud or error or omission or waste of energy or misappropriation of assets or anything, that those will not happen. This is some simple area. See, this is one of the reasons why I want to share with you. See, this is a huge area, and I can tell you that based on my experience for the past 3 decades, internal controls compliance is the hallmark for the purpose of success of any company. In order to be successful, it has to ensure that controls are existing, controls are respected, controls are working, and controls are in place. And without control, nothing happens inside the company. Then the company will never get into any type of problem. This much I can tell you, that those companies which have collapsed, those banks which have collapsed, the persons which have got into issue, the going concern problem, all places where internal controls have been compromised or internal controls have been, people have bypassed internal controls and overridden controls, or management have. So this is a very, very big area. I want you to ensure that you spend adequate time, particularly when you are a statutory auditor. And I know that statutory auditors don't go to the client. They sit in their office and they wait for the file to come to them, or you need to visit the client. You need to meet. You need to go to the shop floor. You need to see the production floor. You need to see the inventory, how it is moving. You need to see. It is very important for you to have a feel of the client. This is important. Compliant with the laws. See, you need to tell the client that if you think that laws and regulation can be bypassed, one day you will get into problem. And in fact, I can tell you one area where, in the case of Walmart Argentina operations have been shut down by Walmart because the Securities and Exchange Commission found fraud and also some sort of ethical malpractice happening in Argentina. So because of which Argentina, the board of Walmart decided to shut down the operations in that country. And even automobile, very big automobile companies, Shell Corporation, oil reserves were understated or overstated by the board, and later on they got into a very detailed investigation that the board knew or did not knew about this reserves or not. So you see, this standard is a very important standard. As auditors, you should insist that internal controls are documented inside the company and by the company, maintained by the company, and we test the controls. We decide whether to rely on controls or not. So this is a must as auditors for all significant areas of business. The stated business objectives, you need to have controls. See that the controls are documented, and you ensure that the controls are working. See whether test the controls, whether it is. Many times auditors test control, but they don't write whether you are going to rely on controls or not. If you are going to rely on control, you don't need to do extensive substantive procedures. You are going to reduce the extent of detailed audit procedures in the substantive procedures. This is important. You need to write how much you have tested, what is the outcome of the testing. Are you going to rely on controls or not? If you are going to rely on controls, in which are the controls where you don't rely on controls. So this is a very, very important control testing, control evaluation, control assessment. And ICAI has come out with very detailed guidelines, ICQ, internal control questionnaire. And amazing work our profession has done. And I want you to utilize it for the purpose of your audit in each client. and you educate each client to say that these controls cannot be compromised. Controls should be in place. If you are having 20 crore today, if you want to become a 200 crore company tomorrow, you need to have controls. You can replicate it in different branches, different geographies, different countries. You will grow. And you have a very detailed on manual and automated controls. And now, thanks to information technology, everything is ERP system, and you have mechanized controls. You have online and automated controls, and those things are there. Which is there. Whatever controls are relevant to audit is what we will worry about. We will test those controls. We will document it. We will decide whether to rely on or not. Then we need to look at then operating effectiveness of operating that's operating effective unless there is some automation to ensure consistency. So various control components. Okay. So this control and communication, assignment of authority and responsibility, HR policies and practices, organization structure. Many times people don't see family managed businesses with service, professionally managed companies, management philosophy and operating style, commitment to competence and quality and also integrity, participation of those charged with governance, communication and enforcement of ethical values. So these are all elements of control environment. And risk assessment procedures, estimating significant risk, assessing likelihood of errors, occurrence of those risks, decide on response and identifying business curve on an ongoing thing. So we need to constantly have this risk assessment process in place, and we need to decide at the end of the day whether we want to rely on these controls or not rely on controls, and we need to move on that. So information system, I am not, this is a very big area, and even NFRA has come down heavily on some observations where they have done inspection that information systems audit has not been done up to the mark according to them in certain inspections which they have come out recently. So information controls and control activities relevant to audits, performance reviews, physical control, segregation of duties, information process. You see this culture of control environment plays a major role in successful companies. General IT controls, and the you see this IT controls, because of information technology currently playing a big role. You have this type of detailed things, whether how IT controls are playing, and what are the general controls, what are the IT controls, and how are you going to do that. Internal control, whether you are going to see, sometimes you as a stat auditor, you may not get too much into internal control evaluation when compared to the internal audit. You may, if you have an external internal auditor, or you have very strong internal control internal audit department, they may do that detailed. If they are checking some 5,000 vouchers, whereas you will do only some 500 vouchers. So it is again depends on the type and nature of controls which are in place, and whether it is a regulated industry, highly regulated industry, or whether you are what type of entity, nature of business. So you have very detailed standards on this. Risk at financial statement level, risk at during the year. You need to have risk assessment at financial statement level. What are those, and what are that each assessment during the year? Whether each month sales have been correctly recorded, each month payroll has been correctly recorded, whether completeness of data, accuracy of the data, cut-off classification. So these standards are requiring you to have detailed documentations on internal control as well as risk assessment, and That way, risk has been a very big practice for our auditors to do that. But this is only with reference to financial statement audit. You are talking risk assessment procedures and relating to internal control assertions and things like that. So again, all of this will boil down to judgment, how much you want to depend on controls and how much you want to do substantive audit procedures, detailed audit procedures. So again, this handout will be circulated to you, and each standard provides detailed guidance on how to go about it. And I feel that all these things you need to do at the interim audit. So material weakness in internal controls. See, sometimes internal controls throw some big gaps. So there you need to get into extensive substantive audit procedures. So there can be frauds, there can be errors. So you need to, in that case, you need to decide on how to go about your audit risk. How are you going to mitigate your audit risk? So those that you need to sit with management and work on strategy to ensure that you are, for example, recently discovered fraud in the case of loans for housing finance companies has very clearly put question mark on the type of controls and risk assessment procedures which should have been in place in those type of companies. Then we get into materiality, and we have detailed guidelines on materiality. And materiality is a very big area. It can differ. I remember very vaguely long time back, I was doing for purchases of one plant for the year is more than 5,500 crore. And for that, I was doing an adjustment of 8 crore. 8 crore, I was doing adjustment of, this is many years back. I'm talking more than 25 years back. 5 crores, I'm making an adjustment for 5,500 crore purchases. And where purchases, opening stock purchases minus closing stock is consumption. And that 8 crore, finally we came to know the profit after tax of the company is only 25 crores. Profit after tax is 25 crores, and that 8 crore is a very material. But when compared to the purchases figure of 5,500 for a single location out of 3 locations, definitely that 8 crore is not material. But see, it depends on circumstances. The materiality can differ. The context of materiality will depend on the type of account. For example, your managing director salary is 5.5 crores for a company, and you are making an adjustment of 1 crore to that, then it is material. So again, it depends on the situation, and it depends on materiality is an ongoing thing, and you need to have materiality being assessed from the beginning of the engagement till the last, when you put the balance sheet signature on the balance sheet. See which misstatement you will not adjust and which misstatement you will adjust. This is a very big standard, and you need to take care of that. And auditor's response to assess the risk. See, once you assess risk, what are you going to do with it? Many times people do test control, people assess risk, but what is that you will do? See, I have 2 areas. One is in assessment of internal control or risk. Then if I rely on controls, I do less substantive procedures. But if I do detailed substantive procedures, I need to adjust the outcome of my audit procedures into the financial statement. These are the 2 major areas. Test of controls we have discussed, and test of controls I'm not getting into details on this. Interim period, whatever interim period work, see, thanks to this quarterly review of financial statement, my view has been that the quality of audit of financial statement has come down, because every quarter you do a quarterly review, but the quarterly review is not audit. See, quarterly review is only a review. Review doesn't become audit. So we need to educate the client that we need to perform audit throughout the year and during the interim period. That interim period audit has to get related to the end of the year audit plan. What you will be implementing. So you not only you need to do audit during the interim period, but end of the year also whatever will give you comfort to the extent to which you want to put your comfort on the audit procedures which are going to validate the numbers. To that extent, you need to integrate the interim audit results to the final year and then see that whether you do excess work or less work accordingly. Using audit evidence in previous audits. See, this is a very big area. See, if you are continuously doing audits on a regular basis, you don't need to keep on very large audits where internal controls are working and regularly you are involved with the client. Nowadays, Companies Act allows you that period. So you don't need to test the same area if you feel that controls are in place. So now I would move to see, once you do test controls and you are supposed to decide whether you want to rely on controls or not. If you don't rely on controls, you need to do extensive substantive procedures. Otherwise, you need to limit, you can rely on controls and do less substantive procedures. So substantive procedures are those procedures which you do very thorough audit. Detailed audit procedures are there to check the transaction account balances or other assertions relating to that account balance. So substantive audit procedures will come in place and there is no shortcut to substantive audit procedures. You need to do that at the end of the period, and you need to perform substantive audit procedures both during interim period as well as at the end of the period. So there are detailed guidelines on how do you modify the procedures. If I am testing 100 items and I find out of 100 some 40 items are having problem, then I need to enlarge my audit scope and I have to do more work. This is where audit fees sometimes becomes a problem. And then audit sometimes, see, we are appointed by the auditors, not by the management, but not by the shareholders. So we need to keep the quality of audit under more careful consideration. This is today the British Parliament and in the United Kingdom as well as in the United States, the biggest problem is quality of audit. Because the more we think we are appointed by the board, our quality will not happen. The more we think that we are adding value to the financial statement through our signature, our audit quality will happen rather than money-making vision. So that is why the ICAI should discuss with the regulator to increase the audit fees, and I feel that if auditors are rewarded even more and better by the shareholders, I feel that the quality of audit will one of the reasons for quality is to go up. Sufficiency and appropriateness audit evidence, I think I am not getting into details here. Here, see, the final area is you have two important things. One is test of internal controls. If you rely on controls, you will do less substantive procedures. But anyhow, you have to do substantive procedures. These substantive procedures will validate the figures in the financial statements combined with the test of controls, and both put together will give you assurance that you can go ahead and give opinion on the financial statement based on the outcome of the audit procedures. Use of service organization. Use of service organization is a separate standard, and I want you to think that these standards are not only standards for the purpose of doing statutory auditor, but these are all revenue streams in a way, because see today I can be an auditor in few of these places and do only service organization work. Today Genpact is a company which does only accounting work for global companies. See, today you have companies, very big companies have outsourced the accounting. In fact, the number of chartered accountants in India is 2 lakhs to 3 lakhs. I mean, over, let us say 3 lakhs, 3.5 lakhs. But the number of people working on accounting for global world across the globe, including banking, financial services in India, is more than 10 lakhs. The number of people working on accounting alone, accounting, reconciliation, payroll, information technology, you take the number of people working is more than 10 lakhs. Because if I am a company and I have my payroll, instead of doing payroll in my company, I give it to somebody else. Then what happens? Auditor has the responsibility to test the internal control in that company where the payroll is done for my company. So though he is my auditor, but he has to get direct comfort out of the internal controls of the company to which this payroll has been outsourced. This is substandard SA 402. So there are companies like ADP which are doing only payroll across the globe. So these auditors, many auditors are there in India who do similar work, and for example, credit card outsourced work, creditor processing, loan application processing. So you have service organization which are embedded with internal control work for the company, which is outsourced. Work has been outsourced. So even tax is outsourced in some companies. Accounting, bookkeeping is outsourced. So you need to test the controls in those service organization, and it is important that the auditor gets some comfort on that. As part of international standards, you have detailed auditor's report to be submitted from those service organization to the statutory auditor. So these two are a very big area, and this involves huge professional work for chartered accountant firms to focus on. Then this is audit evidence. I'm not getting into that as much as possible, but this audit evidence is focus with reference to each engagement. You have detailed procedures, inspection, confirmation, recalculation, reperformance, observations, analytical review process. These are the various components of obtaining audit evidence, and you need to have all of this covered in your audit procedures. So only one is not enough. So you are supposed to get substantial. You have to get sufficient and appropriate audit evidence. So sufficient means all of them, not necessarily one of them. So these are the areas: inspection, observation, and confirmation, recalculation, reperformance, analytical procedures, inquiry, and I will talk to you separately on analytical review procedures separately, and each one of them have to be documented and part of your audit procedures. So test of control substance. This is what I explained you. Two of the major areas: test of controls and substantive procedures. Substantive procedures are test of details and substantive analytical procedures. But one has to remember that analytical procedures alone cannot be constitute substantive audit procedures. You need to test details. Say you can't just perform analytical review procedures and say yes, everything is fine. So that is not accepted according to the auditing standard. Nevertheless, you need to have interrelationship between account balances, which has to be validated through corroborative analytical and corroborative testing of details. So management expert. So this. So management expert, see, every time you have an expert coming and telling you, see, you have areas where auditor need not be an expert in every area. So management has to engage experts For example, geological survey for limestone deposit or oil and gas balances to be validated through experts. Actuary to be used by actuarial valuation in the case of life insurance or general insurance. So you have a variety of experts being used in those situations as what the auditor has to do. That is given in this standard. Audit evidence prepared by management expert evaluate. So we cannot wash away our hands saying that management expert gave the details, but we need to perform audit procedures according to this standard, where we need to evaluate the competence, credibility, and objectivity of the expert, input given to the expert, what is the appropriate work which the auditor, the expert has done. So evaluate the reliability of information produced by the entity, whether whatever the information which is coming from the company, whether it is so there are some special standard where special areas like inventory verification. So primary responsibility is that of the management, but wherever there is mandatory, where it is practicable, we need to do that. You are unable to attend physical verification, how you have then alternative procedures to validate the existence and the other corroborative evidence, management representation, and other things. So you have a special case. Then inquiry regarding litigation and claims, you have, see, I have seen many of these landmark cases on litigation on sales tax or GST claim or excess duty claims, or in the case of Bhopal gas tragedy, you have Supreme Court case on the going concern of the company. So inquiry regarding litigation and claims is a common area where auditor has to will be put into test to see which side of the law. So he cannot become the judge. He has to, the matter has to go to the court. So when we need to, the standard, we need to look at SCF 501 and look at it. For example, last 2 weeks you have been seeing that case with reference to Supreme Court matter in a very large business group, which I don't want to mention. But auditor has to take a call on such type of matters. So the lawyers, communication with the lawyers, what is the predecessant, whether there is a case similar to that in the previous thing. For example, latest M&A of a very large company has been questioned by another very large MNC, multinational company, for that merger or acquisition. So you need to, in such situation, how will you account that transaction? How will you put that transaction into picture? In fact, Competition Commission has been examining few of the Indian M&As insofar as certain industries are concerned, like cement industry, is a published information. So auditors have to take a careful consideration of all these type of matters, and then the financial statement should have sufficient disclosure, and accounting treatment has to be as close as to the reality. So this has a direct implication on matters relating to valuation, and we need to get sufficient management representation, and we need to get sufficient disclosure of information on these aspects. Segment information, again, segment information, appropriate disclosure of segment information as per financial treatment framework, management representation, and qualified or disclosure of information in the financial statement. Opening balance is a very big area. Opening balance, when you are getting appointed as an auditor, or even if you were done last year, and your partner would have done audit last year, this year opening balances you need to validate. And I tell you, I have had my lifespan of my years would have come down because of this. I remember one case where, when I took over as auditor as a first year, and somebody else did the audit the earlier year. That earlier year, the share price was 600. When I finished the audit after 2 years, I finished the audit of this year for 2 years with that work was going on, because client was unable to give information, and the share price was 2 rupees. And for every figure which came from last year, none of the figures are having any support or any figure, and it has to be a loss. And the previous year figures are all turned out to be wrong. And you can find out, this is very important, the standard requires the auditor to validate the current year opening balance figures, because the carrying value. See, I can tell you one important, even current year figures, thanks to this insolvency code. See, now this year, the entire 2020, this code is not going to be admitting new cases, but now you have a case, now you have a law which says that if the borrowing is there in the company or any liability is getting defaulted, NCLT can come inside and take over the company. Once somebody comes and take over the company, carrying values of this company can go wrong. It may not be the same. If the management doesn't continue, the figures can undergo some change. So opening balance is a very big area, and the current context in which this insolvency code is in place. So you need to be careful about the situations under which the carrying values can undergo change because of any situation can bring the value of the asset or liability into a different situation. And this is a very important standard, which is analytical procedures. You can't complete an audit without analytical review procedures. You cannot commence an audit without analytical procedure. See, audit planning stage, you have to do analytical procedures during the proceedings during the year. Also, you need to continuously do analytical procedures, and analytical procedures are important enough to ensure that you don't complete an audit without sufficient analytical review procedures in all material areas. I know all of you are auditors, you do GP ratio, you do input-output ratio, but you are successful auditors to represent the company in front of income tax authorities. But when you sign the account, you need to do this analytical review procedures for every area, whether it is purchases, sales, inventory, input-output ratio, capital asset, interest to outstanding loans and deposits, whatever it is. In bank audits, you need to do savings bank account also, interest analysis. I remember one bank audit I was doing in a quarterly, I found the savings bank interest is wrong. So I asked the bank manager, then they come and tell me after 1 week, they come and say that the interest, that entire program interest run has not been done. That means the software they're supposed to run and savings bank interest run, and they're supposed to pass entry further, they're not done. So analytical review procedure is a very big area, and analytical review procedures, without analytical review procedures, you cannot complete your audit, and analytical review procedures have to be documented. And I can tell you my experience based on analytical review procedures. I have been rewarded very highly by the management because the amount of insight which an auditor can bring to the table through analytical procedures for the management is amazing. And every area, whether it's payroll, whether it is raw material, whether it is finished goods, whether even benchmarking, there is something known as external benchmarking. If this company is making a yield of about 30% as against the competition which is making a yield of 40% in certain industries, the management will appreciate your observation and they will love to have you as part of their management insight committee. This is what you have to bring value, and I think you can't complete an audit without analytical procedures, and it has to be documented, it has to be very detailed. And if you are a chartered accountant who is in the board of other companies, you need this analytical review papers much before you go for a board meeting. This is a very important, and I remember all successful boards have a very detailed analytical review procedures for important components of the balance sheet, and when compared to last year and current year, each product cost finance reconciliation, all these are part of analytical review procedures. Depreciation as percentage of assets, depreciation as income tax depreciation as book depreciation ratios, and income tax as a ratio of the net profit, and variety of analytical review procedures will come out of the work, and it is a must for you to have this analytical review. It should be part of your summary audit process. And there is a detailed standard on audit sampling, and that sampling has techniques. And if my revenue stream has 3 different customers, I have institutional sales, I have private customers, and I have government customers. Each one I have to have different sample, and this is a technical standard. I'm not getting into this standard very detailed, but this is more on what to do with statistics and how, and not only that, samples, how do you sample design, sample size, how are you going to, what are the various methods, non-statistical statistics, and a variety of selection methodology, and how are you going to, once you get the test results, whether you are going to do additional procedures or not, all of them are given in the standard. And this standard is a very important standard for us to do, because we cannot do 100%. And so long as we follow very scientifically, we can depend on statistical methods for our research. But however, we need to have clustering, and we need to see that we do professionally. This we cannot escape our sufficient appropriate audit evidence test through only sample and things like that. Then auditing of estimate is a very big area. I think I'm going to spend some time on this. Auditing estimates like provision for doubtful debts, estimate of useful life, write-off of provision for sundry debtors, write-off. All these things will come here, estimates and fair value. Now you have fair value also, fair value standard also. So this standard, see, accounting estimates are such that that involves a lot of judgments. You need to understand that estimate requires some amount of some management judgment, and hence it becomes more so critical for you to look at what assessment, what judgments have been taken, and many times the profit and loss adjustments come from these accounting judgments, and where estimates are involved. Hence, as an auditor, there has to be sufficient paperwork to prove that you have been involved in validating what management has taken decisions on these accounting estimates. And you need to get into validating what type of inputs went into making these estimates, whether the estimates have been made through scientific inputs which have been correctly given for the purpose, whether it is a provision for gratuity or provision for doubtful debts, or whether it is obsolete non-moving, slow-moving inventory, or whatever, even impairment estimates and fair value estimates. All of them will come here, and I can tell you that as auditor, your ability to prove to review whether you have applied your mind and whether there has been sufficient review and testing of this work which has been done by the management, by the auditor. This has to be proved to the reviewer. So this misstatement can be very high in the case of estimation. So hence you need to get into being more cautious, and also you need to exercise high degree of prepared by, reviewed by, and approved by independent review of work done by the people who are working on these estimates. And how to minimize misstatement in this area is the matter of important. It is a very important matter. Okay, similarly, disclosure of relating to accounting estimates. The accounting standards as well as auditing standards require a large amount of disclosures on accounting estimates. So as auditor, you need to spend time on this. So many times people think, okay, it is only the company's responsibility. No, the auditor is also equally responsible on the type of subsequent to Ind AS coming in place, and fair value getting a lot of importance. So we need to spend time on this area, particularly relating to not only auditing but also disclosure, whether sufficient disclosure has been made. So similarly, there may be indicators of management bias, and that we need to review and we need to factor into the situation. Many times management will say that, see, I'll tell you, particularly in matters relating to going concern and obsolete, non-moving, slow-moving inventory. See, very clear. See, as auditors, when we put signature, our signature has value, and that we should not lose it by putting importance to somebody else's judgment. We need to exercise our judgment and see whether we concur with the views of the management or not, rather whether management is making right decisions or not. Many times management is likely to have a complete biased view about their own. For example, I'll tell you, in the year 2003, 4, 5, and 6, we have written off a lot of amounts for .com companies, when .com companies spend huge amount of money in creating websites and things like that. The accounting pronouncement of ICI told that if this is not going to create value for long term, you write it off. So we insisted on write-offs, and today I think we did a right thing, because those days infrastructure is not available, e-commerce platforms are not working. Today, thanks to technology, and even now when we speak, you and me speak, this last 1 year has been, we have made progress in e-commerce and digital. What we would have achieved over next 7 years, we have done it in 1 year. But in 2003, it is too early. So you see, sometimes you need to, as auditors, you should insist on what is your view rather than what is management view. And this is a very big area. See, you need a document in the file from the client which says that they have told all the truths, nothing but truth, complete truths, everything in way of letter of representation. This is a very poorly managed area in so far as practice is concerned. See, if you are practicing as a chartered accountant, these auditing standards are applicable even for tax audit. Even for tax audit, so general purpose financial statements includes tax audit. So you cannot say no, only if in the case of company audit this is required. No, so long as you sign any balance sheet, it is called general purpose financial statement. And this is how you have to have a letter of representation from the client that the company is responsible for the financial statement. They have given you complete information. They have given all the information. They have told the truth information and assumptions. So you have a management representation format given in the standard for written and tax audit. Even form, each of the forms which you are getting for tax work which you are getting from the client has to have management representation. This is a must, and this is one of the poorly compliant area. Management representation has to be there for significant areas. This is a must. Related parties. See, related party. Related party. Though there is an accounting standard for related party, that accounting standard for related party is whether the arm's length transaction has been appropriately dealt in the financial statement is part of the accounting standard. But auditing standard says that auditor has to evaluate related party transactions and related party relationships and keep it in the file. This is a must. See, please understand now. The company may take view on whatever they do on related party. Accounting standard compliance is less damaging for an auditor as compared to non-compliance of related party transaction on auditing standard. This is a very important standard. The audit procedures have to be performed from the related party transactions, review prior working papers, review client procedures for identifying related parties, inquire about various key management personnel and related shareholders. This is a huge area. Review shareholders records for names of principal shareholders, review memorandum articles, minutes. So this is I'm not going to take you through line by line, but I am telling you that a related party transaction checklist for auditor is more important, and he has to comply with that. And you need to get a letter of representation also on related party transactions, and they have been adequately dealt and adequately disclosed to the auditor. And we have performed sufficient audit procedures with reference to identification as well as tracking of related party transactions. And one more area where the auditors have not been up to date, I won't say that. Say now today we are doing tax audit in the month of December. And December, between March 31st and now, so much has undergone. But where is the evidence on that? Say auditor is supposed to review events occurring between the date of balance sheet and the date of auditor's report. You are going to sign the audit report on 24th of December. So you need to you need to do that. You need to have a document to say this is one of the poorly managed standards. Whenever we went to peer review, we found that the subsequent events are not at all recorded. At least have some paper say that this is how we review subsequent. There are two types of event. Type 1 events which provide the conditions that existed on the date of balance sheet. Suppose if I had debtors on 31st March and whether they have been collected by now. So that is the condition on that. So provide evidence condition that arose after the date of balance sheet. Somebody bankrupt, so I need to write off that as on that date. I don't need to, though it is revenue as on that date. So type 1 event and type 2 events, what type of responsibilities are there? The standard says then events that accrued that happened on the balance sheet date and after the balance sheet date, how do you adjust it? So the standard provides detailed checklists on this, on how to adjust the events which had which had adjusting and non-adjusting event. And so this is about subsequent events. So kindly speak to that. Kindly see to that you have enough evidence and enough paperwork and enough checklists for addressing events occurring after the balance sheet. Next area is going concern. I can only tell you that if the auditor does not address the going concern of the client, auditor will have going concern problem. See, this going concern is a matter of concern for many of the companies, and if the going concern is an issue, then the carrying value undergoes a lot of change. And thanks to that, I explained to you that this insolvency code. So you have now going concern standard has to be taken more seriously than earlier period before 2016. And my view is that going concern is a fundamental accounting principle, and if there are conditions, see, I have had challenges in my life many times. One of the biggest challenge in my life had been to put a going concern challenge in the balance sheet. So we have to put a note in the balance sheet that ABC reasons have come. In spite of that, companies are going concern, or we can say that no client will be willing to agree to put that note. So you need to be careful about it. And most of the times I have taken a view that it is better that by not putting that note, I will get into problem. But if I put that note, client will get into problem. But it's better he gets into problem than I get into problem. This is a must, and we need to tell smilingly to client that this is going to help you. If your company is going to be a going concern, why are you so much worried? Let us put this: you are having negative cash flows, you have losses, you have huge amount of obsolete inventory, you have the whole carrying value of your liabilities become a big problem. You are not able to discharge any of your liabilities. You are not able to get sufficient, generate sufficient cash, and you have huge negative balance in P&L account. So all are indications of going concern problem. But definitely, and people take a view that only 12 months. 12 months period. See, please understand, as at the end of the day, whether it is 12 months or not, it is your signature which is getting into problem. So it is not whether 12 months, all these are not right. If you find going concern is a problem, it is a problem. So let us, you see, sometimes balance sheet itself indicates so many huge problems itself, but doesn't mean that going concern has to be, should not be written. You should write. This is why even with matters charged with governance, you should write if there are negative cash flows or liquidity problems of the client. You should write to the management and say these are all indicating, going concern issues. We need to get sufficient appropriate evidence that the going concern national. Otherwise, we need to take care of that in the auditor's report. So written representation, we discussed written representation. I'm not. So auditor has to obtain a written representation, and also from the board. See, you need to get also a letter from the board that the matter is the balance sheet has been approved and signed. So this is a very big standard, written representation. We have found that in practice, written representations have not been obtained only. You can't sign a balance sheet without written representation. That much I am sure of. Insist on written representation the head before you sign the balance sheet. You insist. And if you are thinking that where will the client go someday, no day will come. Tomorrow things will change. So you need to insist on getting a letter of representation, written representation from the management, and so there is a detailed standard, and this is one of the poorly implemented standards by the practice unit. A letter of representation in the letterhead of the client, and complete all significant aspects should be covered in the letter of representation. Using the work of others. So if you are engaging other auditors, branch auditors, or some other auditor for doing some stock auditor and other things, you need to SA 600 relying upon work of an internal auditor. See, many times SAT auditor does not interact with internal auditor. See, it is very important that as statutory auditor, you call upon, first thing you should do once you are appointed as auditor is interact with the internal auditor, or call the management and insist on having an internal audit done. This many times SAT auditor behaves in a very funny manner, saying that okay, you need to discipline the client to have an external internal auditor or have a qualified professional internal auditor in place. I remember in a very large scam, not only the CFO went to jail, but internal auditor also went to jail. See, this internal auditor relying upon the work of an internal auditor by a statutory auditor is a very big area, and this can help you in ensuring that your audit can be done in a better manner. And there is a standard for this, and you need to do that. And using work of an expert, and those are the standards. So this standard talks about other auditors. External auditor to evaluate adequacy of internal auditor and his conclusion. And see, internal auditor should be qualified and adequately competent. And I can tell you today in India, we have about some very large companies globally keep their internal audit department in India. Very large companies, very big technology companies, very big FMCG companies today have their internal audit, global internal audit is in India. That way, I think I will write to the institute and tell them that our internal audit standards have to go, and we have to improve our internal audit standards in a much more. See, the amount of publicity which we are getting for forensic audit, we should get more publicity. Should be given to internal audit standards, particularly to attract global internal audit work to India. So this is again, I have covered this. See, comparatives. Comparatives, there is a separate standard on comparatives between the last year regrouping, current year figures. So that comparatives, there is a separate standard, and there is a standard on financial reports. So audit report, see, when you conclude, you have to accumulate all the conclusion in each section into the final conclusion, so that where you are reaching the opinion, auditor's report. And I can, sorry to tell this, see, sometimes auditors don't have the final signed auditor's report in their, hey, I only signed, sir, where is the report? See, do you have signed accounts and auditor's report in the file? See, that should be there. And then how did you reach this conclusion? What is the basis of reaching the conclusion should be there. And all the observations from each of the sections should flow into a conclusion, and all the adjusted and unadjusted items should be looked at in totality, including analytical review procedures, and then conclude that auditor's report provides. So unqualified report, modified report, and I'm not getting into that. And the comparatives, there is separate standard. And see, we have a separate standard on review engagements. Every quarter, whatever we do is quarterly is review engagement when we don't do audit. And prospective financial information. See, many times auditors put stamp on some balance sheet and give it to banks. It is not audited accounts. It is just identification. See, that is projections. Next 5-year cash flow projection, put auditor, put stamp. This standard requires you to write what you have done on that, whether you have validated the assumptions, what is the assumptions, what are the assumptions based on which the company has identified the prospective financial information is different from historical information. So there is a separate standard on that. And then engagement to perform agreed upon procedures. See, I remember I was called to not relating to my audit or my company's audit, but I got a call from Central Bureau of Investigation, and there the auditor has given some statement, and based on which company has borrowed money from banker, and there is a company and banker have colluded. Banker has gone to jail. Company officials, company management promoter also has gone to jail. They want to put the auditor in jail, and the CBI is asking me that says the paid up share capital of the company is so much. There is no reserves and surplus. There is no nothing, losses and all not written. But the paid up share capital, that debt equity ratio has been certain based on this particular certificate, for which there is no paperwork. This has been given 5 years back, and the auditor is unable to give paperwork on how he issued the certificate. Agreed upon procedures is a very big area of audit work. See, you do tax audit, you do stock audit, you do so much work on other areas other than attest function. Agreed upon procedures. How have you gone ahead and how have you audited that financial information for which you have been engaged? So engagement letter and things like that. Engagement to compile financial information. If you are doing audit, you are not supposed to do accounting. And this SRS 4010 says engagement to compile financial information. If you are doing accounting work, how you will, many times client will say, I don't know anything. Auditor only did accounting also. I don't know anything. You need to be extremely careful under auditing standards of institute. Under SRS 4410, if you do accounting, you are not supposed to do auditing of the same financial statement. So these standards are very important, and I can tell you the prospective financial statement and agreed upon audit procedures and engagement to compile financial information. These standards are not at all being followed by many companies because they are not even aware that these standards exist. Many practitioners don't even know, or even they pretend as though they did not know this. See, this is very important. When your company is going to a bank and getting a projection validated by a chartered accountant, we have to follow SAE 3400, 3400. And when we do accounting work for a client, we cannot do audit work. If we do accounting work, we have to do under 4410. The standard says every page we have to say that we have compiled information based on information given by the client. So these are the standards. I will take you through case study. I'll run through this, and this case study is very important. The planning document. What is the planning document? Period of audit. Which period you are doing audit? What is the background of this audit under Companies Act, or what it is? Current business position of the client. What is the current business? Financial indicators. What is your projected balance sheet P&L account this year? Significant audit matters. What are the so this planning document should for the year should indicate all these things. In addition to that, what is the current year audit approach? What is the materiality at the time of planning your materiality? What is the audit timetable? Which month you will do what? What are the meetings which you have had for planning? What are the staffing and time budget? One of the poor compliant in most of the firms is timesheets. Timesheet is the foundation of our professional time, and we need to know where we are spending time on what, and prepared by, reviewed by, and approved by. This is a planning document. You need to have document on this planning document. So I will repeat it. Planning document should have these first five, okay, and the next five. So these are the areas. Then we need to have, at the end of the audit, we need to have a document which summarizes the complete audit. I can call it a SOAP, company year and the background and summary financial statements, significant matters resolved and unresolved. So this summary should contain this many information. In addition, it should contain other matters, analytical review procedures and conclusions, summary of unadjusted errors. See, this summary of audit points should also, I would encourage you to have this document, communication of matters with those charged with governance, significant subsequent events, what are those events, and then letter of representation, audit report, board resolution. See, many times companies don't keep the board resolution. See, when I have to sign the balance sheet this year, I need board resolution to adopt the accounts. Then only I can sign, and that board resolution should be certified by the company secretary and should come along with the signed board accounts. That should be there in the file. Audit report and the signed financials. All these documents should be there in the file, and I will open for question answers. We can go into question answers. So we can go into question answers, sir.
1 minute, sir. I think Chairman is compiling the question. I'll just check with them, sir.
And one by one question somebody will read out. Kindly read out the questions. I will answer them because I am not able to see here.
No, sir. If it is compiled, we can share it from our end. 1 minute, sir. I'll just check with them. 1 minute.
You can start one or two questions they can read out so that I can start looking at the questions as answers. How do I see the video? I am not able to see anyone.
No, you can stop sharing the screen, sir. I think then you'll be able to see it.
Now you stop. I have stopped. I have taken a presenter rights, sir. So you can.
Okay.
Now just click on application anywhere.
Yeah, I'll put the questions on the screen as regular, sir.
Okay. See, again, I would prefer somebody reading out.
Yeah, I will read it, sir. I'll put it on the screen and then read, sir.
Okay.
Is it visible on the screen as regular, sir?
Yes, visible, sir.
Yeah.
But it's.
Sir,
can I just zoom?
Yeah, I will just
Okay.
zoom it. 1 second. I'll zoom it.
The society has been audited by a CA for several years. As members suspected about the activities of the society, another CA was appointed to investigate the financial dealings, and on investigation, misappropriation fund was unearthed, and which could have been easily found out by any auditor during the normal course. Is the matter being reported by ICA by the society or the investigator? Is the matter to be reported to ICI by the society? There is a standard on laws and regulation. So my view is that you need to first go with the society's members, governing body. Then you need to see the paragraphs in that particular standard whether you have to report to ICI or not. Because my view is going to the ICI may not solve the problem. So you need to see. You see the question is you need to write in the current year report, auditor's report, or you have to write to those charged with governance. I don't think, because this is common thing for particularly for all these educational institutions and things like that. When you see it is a very clear-cut case of misappropriation of assets and misappropriation of money. So my view is you need to write to those charged with governance than writing to the ICI.
Yeah, next is, sir, could you please give the link to where to download the presentation? I have already put in the chat box, and also in the handouts, the material is available for download actually.
Yeah, full handout has been given as a PDF document.
Yeah, and we'll be sending it later through email also to you.
Yeah. So I think fairly, I think we covered all the questions. Or could you? There is one. Okay. Okay. Any other question is there? You, Chairman, you can tell me.
Yeah, I'm just checking if there is further questions which have come, sir. Just a moment, sir.
See, the very clear, so the message which I want to tell the participant is that the only asset which you have is your signature, and you need to follow the standards to see that you are following, so that your value of the signature enhances every day rather than comes down.
No, there are no further questions, Shakilar, sir. Revati ma'am, anything else you need to?
So any question from the able secretary? Is there, or chairman? Only chairman is there?
No, secretary is not there. Revati ma'am is there. Maybe we'll ask her if she has anything.
No, chairman. See, I think any question is there. I am more worried about questions. See, my humble suggestion to the members is that the profession is undergoing a very different situation under COVID-19, and we are going. The second wave is coming. So kindly advise all your clients to sit on cash. See to that whatever you do, you help your clients to survive for the next 3 years. Ask them to focus on customers and see that they are generating operating cash flows, and they are able to raise enough resources to see that the business does not have going concern problem, and we should support the clients in the difficult period, so that we will be remembered as a profession to have supported the business community as a whole.
Yeah, that's a good suggestion, sir. In fact, things have already started. I mean, members have started already doing that. A lot of calls I get from members telling that, you know, even for the last year where the accounts are getting finalized, they have to show some leniency because there are no cash flows available for a lot of clients, especially the bigger ones.
Okay, sir. Very good. Thank you. I thank you. I thank the chairman as well as secretary and the SARC members, and also the office of SARC, Mr. Paramasivan, Madam Umas, and all the other people who are helping me to ensure that this presentation goes according to the plan. Thank you very much.
Yeah, Revati ma'am, may I request you to propose the formal vote of thanks? Revati ma'am, you'll have to unmute yourself, ma'am. You're not audible. Okay, no audio, fine. So I'll do the honors. Shakilar sir, thank you so much. In fact, it was a machine gun presentation non-stop, where you have covered a lot of things for the members, and I'm very sure everybody who have attended will be benefited. In fact, even now till the fag end, there are more than 500 participants. So that shows the quality of presentation you have delivered today. Thank you so much. And in the coming future also, we'll keep disturbing you so that our members stand to take more benefit from your knowledge and your wisdom. Thank you, members. Thank you. And feel free to write to us for any suggestions you have. We'll be happy to have programs which the members are interested going forward. Thank you all.
Thank you. Thank you.